Good morning. Welcome to New Hampshire Business Review's Residential Real Estate Trends for 2025 webinar. We're going to talk about housing, trends in housing reform, how deals are being cut right now, accessory dwelling units, all the latest that's happening right now. We have on our panel Bob Quinn, who's Chief Executive Officer of New Hampshire Association of Realtors, Julie Youssef, who's Chief Program Officer at New Hampshire Housing, and Matt Lee, who is first Vice President and Retail Lending Director for Kennebunk Savings. Welcome, everybody. We're going to kick off with Bob Quinn, who's going to give us some highlights about housing reform bills that are before the legislature. He was actually listening to one underway right before we started this webinar, and it sounded like it was coming to a close. And you could tell us about that, as well as the new group, the new coalition that is advocating for a lot of these bills that are going before the legislature.
Great. Thanks, Mike. Can you see my screen okay, Mike?
We can see it.
So my name is Bob Quinn. I'm the CEO here at the New Hampshire Association of Realtors. And I'm gonna talk a little bit about some of the legislative efforts on housing inventory and to try to, and efforts to try to control the affordability crisis that's happening throughout the state. But I thought I'd set the scene a little bit, show you. You see in front of you is a graph of homes for sale, single family homes for sale in New Hampshire in each month over the past 10 years. And you can see there has been a steady decline in the number of homes that are being offered for sale in the state. You go back to 2016, the peak months in the summer, you might see over 8,000 homes for sale in a month. This past February, we were down, this past summer, we peaked out at about 2,500. So inventories dropped about 75% over the past 10 years. And, one of the things we often hear, and Mike was referencing a debate that's going on right now in the State House on a bill, on a housing bill. And a lot of the opponents of it are saying, well, it's not really, the issue is not really a supply and demand issue. What we're seeing is increase in mortgage rates. We're seeing increase in cost of supplies, wood. That's really what's leading to the housing inventory shortage. I would suggest that this chart kind of rebuts that. If you go back, obviously, 2015, 2016, 2017, interest rates, you're all familiar, hovered somewhere between 3 and 5%. And yet we continued to see a downturn in inventory. Lumber prices were much less expensive, but we still saw a decrease in inventory. Even as we hit COVID, you see a sudden decline in inventory, but we were on our way to where we are today anyway. If you look at that chart, we sort of sprinted to the end of the path, but we were walking that path anyway. And similarly, in terms of median sale price, steady increases. We've seen back in 2015, median sale price of a single family home was $225,000. It's now up to $510,000 in February of 2025. Normally, historically, housing prices will increase 4 to 5% per year. So if you go back to 2015 and you do that math, where housing prices should be, then at a 4 or 5% increase, I calculated a 5% increase, would be at about a $360,000 median sale price, but we're at 510. So the real challenge here then is, how do we bend these curves? How do we get more inventory and therefore kind of helping to control the affordability issue? So what has happened is we, the New Hampshire Realtors, New Hampshire Home Builders, New Hampshire Business and Industry Association have joined together in a coalition to push and advocate for legislation in the State House that will begin to hopefully, again, bend those curves. Kind of put it, and by the way, the coalition is, even though those groups are sort of leading the charge, a lot of others have signed on. Chamber of Commerce's from across the state Ski New Hampshire has signed on, the New Hampshire Retail Association, and many others, because what the New Hampshire Business Industry Association will tell you is the number one issue from their membership's perspective in terms of attracting and keeping workers is housing. And you can see the challenges that they're having based upon the previous charts. So we've kind of broken up into 3 different pillars. So one is land use reform. The second is regulatory permitting reform. And the last is providing additional funding for housing across the state. So I'm going to very quickly go through some of what those are. And I'll point out that we've already seen 2 bills that have been fast-tracked through the legislature. And one of them is, so this is the 100th anniversary of the New Hampshire zoning statute. And House Bill 399, which has been passed the House, the Senate, enacted by the governor. That's going to create a study commission to look at the entire state housing statute, RSA 674. Remember, even though we all talk about we are a local control state, it's kind of a misnomer. Towns are only permitted to do those things which the state authorizes them to do. And when it comes to zoning, that's through 674. So there is sort of a discussion about maybe trying to balance out a little bit of local control, towns being able to do what they want, but at the same time, the state recognizes there's a need to protect private property rights and have towns gone too far in removing individuals' ability to do with their own property what they best see fit. In SB 4, I'm not going to go into all details. That would take 45 minutes. But again, that's a way to help multifamily developments and with financing, make it a little bit less expensive, hopefully, again, to bring down that affordability curve. So generally in land use reform, a couple of the big bills that we're dealing with. One is the first one on your chart there is accessory dwelling units. So as many of you probably are aware, right now under the state statute, you're allowed to have a ADU. If it's attached, that's in the state statute. Every town has to at least allow that minimum requirement. This bill would expand that to having an attached or a detached. Increases the minimum requirements of town from 750 square feet to 900. I think it's 900 square feet. It might be 950. And it also guarantees it by right. So you only have to go through your building code officer. You wouldn't have to go through your planning board member, your planning board. So that bill is passed out of the House. It's on its way to the Senate. The second sort of bucket there is minimum lot sizes. So a way that affordability housing, if you want to build a 2,000 square foot home, you want to do it on a quarter of an acre, you get yourself a nice home, starter home, there's land for a front yard, a backyard, quarter acre will do it. In many towns, that's illegal. You can't. You're going to need to have at least 3, 4, or 5 acres in order to build that 2,000 square foot home. Obviously, as land costs, you require more land, the cost of construction is going to increase significantly. SB 84 and some of these other bills are trying to get at that issue and mandating on municipalities that, hey, you can only require so much land in order to build a house. And as Mike was mentioning, I was listening to a debate on a bill that's going on right now. It's SB 84, which we're crossing our fingers. That one appeared that potentially might move forward in the Senate and go head to the House. So that would be maybe the biggest piece of legislation in housing if it were to pass. Similarly, Senate Bill 170, that just passed out of the Senate. It does a variety of different things, but it has to do with frontage and setback requirements. So again, a lot of ways that municipalities sort of restrict the ability for a developer to build homes is making significantly or larger frontage requirements, 150, 175, 200 feet. SB 170 would restrict that to 50 feet. Parking, lots of bills regarding parking, also attempts to try to allow residential uses in commercial zones. That one's proved probably of all of these in some ways one of the more controversial aspects of reform, but the parking bills are kind of moving forward. So we're happy about that. manufactured housing as well. That bill guarantees that manufactured housing would be permitted in all residential zones in the state. So those are sort of the big land use reforms bills. The next bucket is regulatory and permitting. The governor has said repeatedly, campaigned on, you have 60 days to do permitting. From the state perspective, I guess the land use I always look at as sort of, trying to get a planning board or requiring a planning board, make it easier for planning board to say yes. But once that you get that yes, then you have to go through a permitting process, and that can kill a lot of projects as well. So the governor's trying to make that sort of 60-day process, and she put that in House Bill 2. There are other things to lessen the needs for a number of stairwells in a multi-family unit, as well as ensuring that municipalities cannot require codes that go beyond or are more restrictive than the state building codes. A variety of other things that, again, trying to get at the regulatory and permitting. And then the last bucket really has to do with funding. And this is going to be the toughest one in many ways. As many of you may be aware, the state has, and both the House and the Senate, the governor have talked about having to make significant cuts in the state budget. So expanding dollars available for housing may be very challenging as we go through this budget process. So that's kind of where the legislature at least is lining up. The battle is always similar, and the debate is always similar. It is towns, municipalities saying, no, we want to control what happens in our communities, and it's not in the interest of the state. And the state is saying, and what we are saying is the state does have an interest. If one town makes the decision that they're not going to allow housing in their community, that's going to impact all of the towns nearby, adjacent to that community, and it's going to impact the state economy. And the businesses are basically saying that very clearly over the past couple of weeks at the State House. So with that, I will end my presentation now, and I will turn it over to Julie. And I will attempt to stop sharing if I can do that.
Okay. Thank you, Bob. All right. I'm going to attempt to share. I think if I share, it might just override James. Okay. Good morning, everyone. My name is Julie Youssef. I'm the Chief Program Officer here at New Hampshire Housing. So today I'm going to be talking about residential real estate trends in 2025, but I'm going to have a focus on first-time home buyers. So as Bob mentioned, a very little inventory, very challenging market persists for home buyers, and especially for first-time home buyers. Last year, New Hampshire Housing was able to help almost 1,100 families buy a home. And we do so by offering mortgage programs and down payment assistance to eligible home buyers. Our outreach is made possible statewide through a network of lenders that we work with that partner with us and offer our mortgage programs on our behalf to consumers. So we were able to help 1,100 families last year, and about 1,000 of those families were first-time home buyers. And so I wanted to show trends in how the dynamic has shifted for first-time home buyers and how they're kind of navigating current market trends and dynamics right now. And so my whole presentation is showing data from 2018 all the way through Q1 of 2025. So this is the data set that I'm going to be working with. So this is not inclusive of all first-time home buyers. It's really just data, mortgage data that New Hampshire Housing has, and represent about 10% of the overall market transactions in the state of New Hampshire. So since 2018, average loan size has increased. So in 2018, the average loan size was around $200,000. In the first quarter of 2025, it was up to 321,000. So they're buying more expensive homes. Not a surprise there, given, as you could see in Bob's chart, where the median home price has continued to increase for many years now. So average home size is up about 100,000. Interest rates continue to remain high, relatively speaking, to the kind of COVID timeframe. But we've been, I would say, consistent in interest rates for the past 2 years, where they're hovering right around like the 6.5% range. And looking at the forecasts, that will probably likely stay for most of 2025 as well. When you factor in that higher purchase price and that higher interest rate, their payment is obviously going to increase, first-time home buyers' payment. And so that's gone up about $1,000 in this time period. And that's their level payment, their principal and interest payment. That doesn't factor in increases that we've seen in insurance costs and also in property taxes. We have not really seen any change in kind of the makeup of the borrowers, meaning like they're not adding co-borrowers or, like the multi-generational households. We're not seeing, the data is not showing us that there's a shift in that trend. It's remained pretty consistent since 2018. And same with age too. I've seen some news articles that people are delaying getting into homeownership, but we really haven't seen that in our data. So some of the highlights, again, average loan size is up about $120,000 for first-time home buyers. The mortgage payment's up about $1,000. No real change in borrower composition or age. And interest rates are currently in that mid 6% range, and we're expecting very little rate relief in 2025. So just looking a little bit more at the data, we have on every single loan, we're calculating the average housing debt ratio, which is essentially taking their monthly mortgage payment, dividing it by their monthly income, and you get a percent. And kind of rule of thumb for affordability is 30% is kind of what you determine as affordable. And so we really haven't been at that 30% range since kind of the COVID time, the 2020 range. So home buyers are paying a higher percentage of their income towards their mortgage payment. Really not a surprise, seeing the increase in home prices and increase in interest rates. What is interesting is that we haven't seen that shift in average debt ratio. So this is taking all of their debt, dividing by their monthly income. So their student loan debt, their car payment, their credit cards, all of that debt. It has increased slightly since 2018, but it hasn't increased as much as the housing debt ratio. So what this means to me is, one, households are generally higher income households are getting into home ownership. That's one. But two, I think consumers are being more mindful of their debt. So they're trying to get ready. Households are getting ready for home ownership. They might be keeping their car for a little bit longer. Maybe they're trying to consolidate some of their credit card debt, try to pay that down, pay off their student loans before they get into home ownership, because they know that mortgage payment is going to be high. Another interesting trend that we've seen is that they're better credit borrowers since 2018. So we've seen a huge increase in credit score. And some of that will be explained through the type of mortgages that they're getting, but a huge increase in average credit score from slightly under 700 to almost 742 in the first quarter of 2025. And then lastly, as I said, our first-time home buyers are making more money now. So this is average borrower or borrower's income. So this isn't a single person's income. This is, if there's two people on the mortgage, it's both of their incomes. So it's kind of difficult to say this is how much a single person is making. It's really kind of like that household borrower income, but it's averaging around $98,000 for the quarter one of 2025. So another interesting shift that we've seen in the data is the type of mortgage that our first-time home buyers are getting. So here I have your mortgage matters, and I really think it does when trying to compete in this market. So generally, like first-time home buyers were always kind of getting that FHA mortgage. It was low down payment. It was first-time home buyer friendly. And what we've seen over the years is that there's been a downward shift in the utilization of an FHA mortgage and an upward shift in what I have labeled here as private mortgage insurance. So that's your conventional mortgage. So in 2024, about 40% of the mortgages were FHA, where in prior years there were some months it was, or there was prior years where it was closer to 70% of the mortgages were FHA. So downward shift there, increase in conventional. I think putting an offer on a home with a conventional mortgage, it's just a little bit more competitive. There's less strings attached, and there's always been this stigma associated with FHA mortgages, unfortunately. And so we've seen that dynamic. The other is what we call is like uninsured mortgages, but essentially it's borrowers that are putting more than 20% down and don't need to pay PMI or private mortgage insurance on that because they're putting that 20% down. We've seen a shift here where more first-time home buyers are doing that. I don't have the data here or in our system to be able to identify whether that's a gift that they're getting from a family member or whether they're just saving up 20% and putting that down. But we have seen a big shift in people achieving that 20%, getting rid of that PMI, that monthly PMI, and making their mortgage payment a little bit more affordable on a monthly basis. RD lending, which is typically done in rural areas, 100% financing, it's a great program. Unfortunately, it's pretty much non-existent nowadays. It's really difficult to get these offers accepted, and there's a lot of program limitations, especially income limits, that make it very difficult to use it. And then our VA borrowers, not a lot of activity going on there, but it's still, I would say it's been pretty consistent over the years, which is great to see. So here I have top first-time homebuyer towns and cities. So where are our first-time homebuyers buying? I have a comparison from 2018 data to 2024 data. And so I tried to highlight some of the changes between the two different data sets. So the towns that dropped off for top towns would be Milford, Goffstown, Hillsborough, Pembroke, and Wakefield. Those are not on the top 15 list in 2024. Towns that were added in 2024 are Berlin, Claremont, Dover, Farmington, and Barnstead. So traditionally, first-time homebuyers are most likely buying in these types of communities. Not a huge surprise here. Manchester, Concord, Nashua generally have kind of those starter homes or smaller homes on smaller lots, making it a little bit more affordable for first-time home buyers. We have seen a shift in what type of home they're buying. First-time home buyers generally buy single-family homes, but there has been a shift there. So condos are picking up in popularity for our first-time home buyers, and single-family homes are trending downward. Multifamily homes still remain an option for many first-time home buyers, where they can buy the home and offset their mortgage payment with some rental income. And again, manufactured homes has remained steady since 2018 as well. So it's just some of the highlights in the data that I just shared. We have seen a noticeable shift away from government-backed loan products. People are using conventional loan products a little bit more. There is a growing demand for condos and townhomes. They tend to be more affordable for first-time home buyers. And then I've coined it as some affordable housing hotspots. Berlin, Somersworth, Claremont, Farmington, Dover, you can still get some affordable deals in those towns. I wanted to share some details on how our first-time home buyers are structuring some of their transactions and getting their offers accepted. And so I just picked two examples. We have tons of success stories, but I've picked two here just so you can kind of get a sense of how you can leverage New Hampshire Housing's loan products and our down payment assistance to get into your first home. So this example here, we have a first generation home buyer. So not only are they a first time home buyer, but they're first generation home buyer. So their parents had never owned a home either. So they're coming into this transaction likely without any type of generational wealth, any type of gift from their parents. They were able to purchase a $500,000 home. It was a two-family home in Somersworth. They used an FHA mortgage, so they were only required to put 3.5% down. Their closing costs were about $22,000. Their down payment was about almost $18,000. The borrower received $25,000 from New Hampshire Housing in down payment assistance, so they were able to stack some of our down payment assistance programs together. We have a $15,000 down payment assistance and a first generation home buyer program. So they were able to stack those two and get $25,000 from New Hampshire Housing. They negotiated a $1,000 seller credit from their seller, and they were able to have the seller pay for their buyer's agent. So when they got to the closing table, they had to only bring $15,000 to the closing table to acquire that $500,000 home. So now that they're in it, it's a two-family home, and they're able to rent out half the home and offset their monthly mortgage payment with that rental income. One other example, this was a first-time home buyer that bought a single-family home in Farmington for $339,000. They used an FHA mortgage, so they had to put 3.5% down, about a $12,000 down payment. Their closing costs were about $18,000. They leveraged $10,000 in down payment assistance from New Hampshire Housing. They negotiated a seller credit of $9,000 for this particular transaction. And so when they got to the closing table, they only needed $1,000 to get into that first home. So this presentation will hopefully have provided you some guidance that you can share with first-time home buyers on how to be successful in this very competitive market. But I think really the baseline of being successful is making sure that you have a good loan officer and a good realtor working for you. And we like to call that as building your team. And so we've made that really easy for first-time home buyers to build their team. We recently launched a website where we have highlighted all of our most trusted loan officers and real estate agents on our website for first-time home buyers to go on, browse, get referrals, and connect with a loan officer and the lender in just a few minutes. So we've made that easy for them. And here I provided a link, and this will be shared after the presentation, of where you can get to that website. This is my contact information if you want to reach out with any questions. But that is all from me. So I'm going to stop sharing, and I will pass this over to Matt Lee.
All right, awesome. Thank you very much, Julie. And thank you everybody for having me here with you today. My name's Matt Lee. I'm the Retail Lending Director with Kennebunk Savings Bank. And kind of the purpose of the presentation today is to kind of specifically kind of hone in on ADUs, or accessory dwelling units, and how we've gone about financing that, having a very specific product for that. I thought it was important to kind of fill you guys in on who we are as a bank, as well as some of the reviewing some of the needs of the communities that we serve currently when it comes to housing. So we'll get right into it here. So Kennebunk Savings Bank, we've been around for a little while, since 1871, so that's 154 years. We are a mutual savings bank. We don't have stockholders, and I think the beautiful part about that is it enables us the flexibility of creating these kind of niche products like our ADU loan. We have 16 total branches. Our most northern branch is our Kennebunk branch, and then all the way down, spanning all the way down to Seacoast, New Hampshire. We're comprised of about 320 employees and are about 1.8 billion in assets. I think one thing that we pride ourselves a lot on is our community promise program. I'm just going to kind of throw this information up here. This was founded in 1994. It's kind of our, we treat our community members like our stockholders. At the end of each year, we provide 10% of our net profits as kind of like a dividend back into the community. And you can see how it's kind of grown over the years. A lot of endeavors that we've done recently is we donated land behind our operations center here to Avesta Housing. There's a big need for affordable 55 plus housing. There's a 300 plus waiting list with Avesta Housing. So we did that in order to help support the need for that. I would say that what we haven't done yet is leverage mortgage lending in order to support the needs of our community. And for us, the ADU loan was kind of the start, is really what I feel an extension of our community promise program. So let's talk about what's kind of going on out there with housing and what the need is. So I think we all know that housing is a critical social determinant of health, safety and security, and that's what housing can provide us. Up here in the state of Maine, by 2030, we would need 84,000 new units to satisfy the need for housing here. And I know for New Hampshire, it's 60,000 new units between 2020 and 2030. I believe it's 90,000 units up to 2040. From some of the recent data that I had reviewed, I can see that for New Hampshire specifically, inventory is still tight, but it does look like it's growing, which is a good thing. So something to kind of keep an eye out there. ADUs are very tied right now, especially up here in the state of Maine, to legislation. So we have LD 2003 that was passed in, I believe, 2022 in order to make it a bit easier for, and really set the groundwork for the meets and bounds for towns to they have to allow for ADUs, and kind of gave them some guidelines to provide homeowners. And that's all, really in an effort to increase housing supply, and where ADUs could potentially help with population density and maybe affordable housing. So whereas ADUs aren't the end-all be-all solution for housing, it does provide a good potential solution for folks that are looking for housing. So, in the mortgage world, we talk a lot in acronyms, and not everybody knows what an ADU or accessory dwelling unit is. So I figured it'd be a good time for some of you that don't know, maybe just to educate you a little bit. So an accessory dwelling unit is a small residence that shares a single family lot with traditionally a primary dwelling that's larger in size. I think what I found through a lot of this is that some towns predicate the size of the primary dwelling to the max allowable size amount for the ADU itself. So some towns will say that if you have a 2,000 square foot primary dwelling, that your ADU can be no larger than 50% of the primary dwelling. It also has to meet road frontage and all the meets and bounds and ordinances of the town. But that's kind of how some towns kind of play into the primary dwelling and the size of that, and what you're allowed to build for an ADU. It's extremely typical that an ADU is an independent, self-contained living space with its own kitchen or kitchenette, bathroom, and sleeping area. I've always said that, ADUs are just another kind of way of thinking of like an in-law apartment, which I know a lot of folks are more familiar with that terminology. Aside, I think, from increasing housing supply, especially from a rental standpoint, and increasing population densities in your towns and cities, I think some of the benefits from a homeowner's perspective is really enables family members to reside on the same property while having their own living space. And kind of especially for elderly folks who no longer want to maintain a bigger house, but want to really love their property, want to remain on the property, and ADU is a good way for them to downsize. And relatively to what the pricing is right now, could be shorter money to get into a new home on the property. It allows them to age in place. And for some families, one of our first ADU loans that we did here at the bank was to help a daughter whose mother just got diagnosed with Alzheimer's. And so the ADU was for the mother, where the daughter could take care of her, but it still allowed the mother to have her own space where she could remain independent and be nearby. So that was a really good one for their family as they're going through a lot of transition and change. For homeowners who are looking for maybe that boost for some additional rental income, ADU does have its benefits there, as well as on the flip side, for tenants specifically who are seeking affordable housing. ADUs are a good option for them to live and rent there. As I know, even just talking when I was a lender, talking with some borrowers, being really stressed out with the fact that even just finding rents right now, and affordable rents, if that, has been a struggle, and have created a lot of stressful scenarios for folks. ADUs could really help support that. So kind of with all that said, we've had quite a journey here at the bank as far as being introduced to the idea of ADUs and being educated. It really started off with our first name here, Ryan Pope. He was at the time with the city of Dover, and really kind of filled us in on what New Hampshire, but what specifically Dover was doing in regards to ADUs in creating more housing opportunities for folks that are looking for it, as well as opportunity for homeowners to get rental income, but also provide that kind of aging in place opportunity there. Ryan did a great job educating us, and we thought after talking with Ryan, it would be advantageous for us to further educate ourselves on what's going on with our fellow community partners in their neighborhoods, and to help educate further what they're doing as far as ADUs go, and the meets and bounds and ordinances, as well as talk about the financial barriers that homeowners are voicing when it comes to ADUs, which we'll get into in a second here. I did list out these folks that we had a meeting to. It was a great discussion. It was about a 2-hour meeting. And I figured I'd list these guys out because for any of you guys out there, especially lenders attending that are thinking about offering maybe an ADU specific product, these guys will do a fantastic job kind of educating you. And what I will say is a lot of them are extremely passionate about housing. And so they kind of really motivate you, and I think challenge you to think outside the box in the way you lend, and in creating a product like this. So, part of our big discussion, like I mentioned, was talking about currently what are the traditional ways that we could potentially finance ADUs. But with that said, with those traditional ways of doing so, what are the barriers that they could potentially present? And so right now, and depending on your lending institutions, it might be a little bit different, but what I find the three traditional ways for financing ADUs are what we call cash out refinancing. So you're essentially refinancing your existing mortgage to get additional equity out to order to support the build of an ADU. Another one is a home equity loan or line of credit. So that's a second mortgage that you could also leverage should you have the equity to support it to build. And then you have your traditional construction loans, which we'll talk about in a second. But I think construction loans, they're not, due to the risk of them. And I will always tell people that construction loans are probably one of the more riskier loans a lending institution will do. And I think rightfully so. So they're not always entirely the most flexible option, but they are a traditional way of going about it. And so some of the key barriers to financing, I'm sure if I could see you all here in person today and ask the question, how many of you guys have interest rates between 3 and let's say 4.25%? I think a lot of you would raise your hands. A big barrier is that when you're thinking about some of the traditional ways of financing, having to refinance to get cash out to build the ADU is not really an advantageous route financially. To get yourself out of potentially a 3% rate, to get into more what a market rate is nowadays, which could be anyways from 6.75% to 7.5%, depending on the institution. So it's really not worthwhile for homeowners to have to go through that process and doing it financially. You kind of mentioned earlier too. I mentioned doing a home equity loan or line of credit if the equity is available. So loan to value is, again, another barrier to financing. Do you have enough equity to support what you need and what you potentially need to roll over on your current mortgage to support ADU financing? I think the big topic of conversation amongst financial institutions is whether or not they're doing their appraisals as what we call as-is appraisal, so as the property stands, or if they're doing it subject to completion, which means that essentially you're including the ADU and the improvements that you're making upon the home in the appraised value, which could potentially give you that boost in value that you'll need to support the transaction. So that was kind of another roadblock there that we discuss. I think we talked about earlier, and Julie had mentioned debt to income in her presentation, but affordability. So with these traditional ways of financing, adding that extra cost onto your mortgage at a higher interest rate, especially if you're going from a low interest rate product, could really put a bearing on affordability. And I know for home equity lines of credit too, which is a great option. Some institutions even have no closing cost lines of credit out there, which make actually doing the line of credit more affordable. But you're still qualifying with some institutions, at a 15-year mortgage at whatever, if it's Wall Street Prime, at that payment, and that payment could be quite exuberant. So depending on how much you need to build an ADU, affordability may be an X factor there. So that's kind of, something that we really kind of delved into as well. And then I mentioned construction loans. Again, a lot of the times they're not entirely flexible. I know that some places don't allow for owner general type projects to keep things, again, more affordable. And there's just a lot of meets and bounds that you have to go through with construction loans. And so the idea behind these discussions that we had with the list that I showed previously is how do we, as a lending institution, provide further support to the communities that we serve and make products more accessible to help them help increase housing stock, and being that ADUs are kind of a potential help to that. And so that is my presentation for right now. I'll go with a Q&A. I'll go into a little bit about what we're doing here at the bank, but I think I'm going to invite you guys for that Q&A, and I'm going to kick it back over to Mike.
Thank you. So I'd like to go back to Bob for the first question. And I think what I wanted to talk a little bit about is when we're talking about towns that require you have to have a 2 or 3 acre lot to build, going from there to a 1/4 acre lot. And I say this from somebody who I lived in the Denver Boulder area, and I once owned a home about 2,000 square feet on a 1/4 acre lot. It was a development of a couple dozen homes. It was a part of a bigger development that had a park, swimming pool. We had a pond that we could walk a mile around, but our lots were really small. So when we're talking about doing that in New Hampshire, I think we have to envision communities that it's not like you're going to have a house with 3 acre lot next door to one with a 1/4 acre lot, but more of developments where you have higher densities in return for some open space allotments, things like that. Tell me a little bit about that trend. Did you see that happening more in New Hampshire?
Yeah, and keep in mind, when we talk about an acre lot, I mean, a football field is about 1.2 acres. So, that kind of maybe puts it in perspective in terms of how big some of and many communities are requiring 3-4 acre lots. So it's 4 football fields in order to build a 2,000 square foot home. And the requirements of state zoning is the towns are authorized to sort of put these restrictions in if they can demonstrate that there is a health and safety reason for doing so. In most cases, when we talk about health and safety, it is has to do with septic systems and well designs and things that the New Hampshire Department of Environmental Services oversee. So you can certainly do that on lots which are much smaller. And of course, if you've got I was talking to a realtor not that long ago, and he was telling me that, there is a community, one of his communities, they have municipal water and sewer, and yet they still have 2-acre lot minimums, which seems to be an enormous waste of public resources in order to require that. The only way we are going to get out of this is if we are going to build more densely. That's it. I mean, I've been waiting for someone to tell me some other choice. But if we need another 40, 50,000 units of housing, you're not going to do that by creating 40 to 50,000 or 80 to 100,000 football fields. You're going to have to do it more densely. And I'll break a little bit of news here while we were talking. So the New Hampshire Senate did pass Senate Bill 84, and that is, kind of sort of a game changer. It would mandate on all communities that at least on half, so it's half of their residentially zoned properties, if you don't have water and sewer, then they can only require a lot of 66,000 square feet. I'm sorry, of 2 acres. They amended it, so now it's 2 acres. If you do have water and sewer, then it's a half an acre. So that's really a big step in the right direction. We're only halfway. We're not even halfway through the process here, but for many of us who have observed this for a long time, that's a real change in the way the legislature has behaved recently in passing a bill like that. But I know, having talked to a lot of legislators about this, they're hearing it from their constituents. Their constituents know and understand and feel on a day-to-day basis that there is not availability of housing in the state, and it's impacting them.
Just want to remind folks who are watching the webinar, if you have questions, you're welcome to put it in the chat and we'll try to get to some of them. For Julie, when you were talking about the income levels are higher now for first-time home buyers, and you showed over a course of 6 or 7 years. What kind of jobs do these people have, and who maybe you're not seeing as much of because they've been kind of priced out?
I mean, it's really a combination of everybody. I think I always think of income on like a spectrum, and I think like the lower income spectrum where they may have been able to purchase in the 2018 timeframe, they have really been priced out. So the spectrum is kind of like shifted upward. I don't have specifics of professions that have really been priced out, but it's difficult for everybody. And when we see the loan files come in, I mean, it's a combination of your teachers, your finance folks, your nonprofit, government. It's really everybody. Those 2 examples that I had provided, those are people who live in New Hampshire, work in New Hampshire, and just wanted to buy their first home in New Hampshire. But I think people it's tough out there to make ends meet, and so people are moving jobs, trying to get those higher income positions. Also, we've seen a lot of people with part-time jobs also just trying to make the numbers work.
Or choosing to go to Berlin and places like that where they're more remote, but a whole different lifestyle for home ownership.
Sure, and if your job allows you to live up there, then that's great. You can get a great deal in Berlin.
Matt, tell us about what towns you've been working with in both in Maine and New Hampshire, where they're more receptive to ADUs, and you've made some progress there.
Yeah, I would say New Hampshire, we've been working with the town of Dover and Portsmouth so far specifically. I think that's where we get a good amount of our requests for. Maine, it's a little bit all over the board. Our primary market area is York County, so areas like Kennebunk, Kennebunk Port, York, Kittery. I know Kittery's pretty receptive to ADUs, and they even have a grant program for it, a $75,000 grant program that they use to support the build of ADUs. So they've been pretty progressive. I would say even the town of Saco, Maine, as well, has been very progressive, and that was actually where we closed our first ADU loan, as well as the town of Gorham. So I think those are kind of some of the trending areas that we're seeing applications for kind of at the moment with the bank.
Thanks, Matt.
Mhm.
Bob, before I came on this webinar, I was listening to another one. It was Bob Gottlob, who is the economist, Brian Gottlob, for the economist for the state and also a consultant. And he was talking about the Manchester forecast for the year. And he noted, and not a surprise to any of us on this call, that the workforce in New Hampshire is still smaller than it was before the pandemic. We've made some gains, and of course, housing is a huge part of that. That's them leading to a question more of how the coalition came about because of that need. I mean, workforce is not going to grow without more housing.
That's right. I give a lot of credit to Mike Skelton at the New Hampshire Business and Industry Association for sort of pulling in these different groups and working as a coalition. But their message has been clear from the very beginning, and that is anywhere that he speaks to, any company that he's talking to, the first topic that the CEO, wherever it is, wants to bring up is housing, that they are constrained in their ability to grow their workforce because they cannot attract the type of worker into New Hampshire because there's no housing. We had a conversation not long ago with someone with a local hospital, and they were telling stories about how they'll get a nurse and they will offer that nurse a job. And the nurse will come back 30 days later and tell them, you know what, I can't take it. I have been trying to find a place to live within a reasonable period of time, and I cannot. And that not just nurses. It was a story about a doctor who was unable to find adequate housing, and ended up after many months, having to live over an hour away from the hospital. It is constraining the ability for the state to grow its workforce and therefore grow its economy. So when we talk about, hey, this is a local issue, it isn't. It's going to impact it. What happens in one part of the state is going to impact another part of the state. And we all have to contribute and be a part of the solution. Towns cannot choose to take a pass on this.
You mentioned nursing. That's the number one by far job in demand in the state right now. Not surprised there either. What would you say, Bob, to communities that are worried about this is going to change the look of New Hampshire? This is going to change why people come to New Hampshire. We're a largely forested state. We tend to be a more slow-growing state compared to other places I've lived, Florida and Colorado. New Hampshire moves at a much slower pace, but we've also preserved the way of life that people like here.
Well, I mean, I guess I answer that two ways. First of all, back in 2017, 2018, for those who might remember, the legislature was debating a bill regarding expanding, as Matthew pointed out, accessory dwelling units. At that time, a lot of communities said, hey, if this passes, the character of my community is going to change. Neighborhoods that are single family, now we're going to become multifamily, and everything's going to change. It hasn't happened. It didn't happen. There has been no serious attempt to try to repeal or reform that bill up until this year, when we're actually trying to expand it. And in fact, many communities over that 7-8 year period now have on their own expanded the rights of property owners to do detached ADUs and to expand the footprint of that accessory dwelling unit. We hear a lot of times rural characteristics and protecting the rural characteristics, and we all do. I grew up in New Hampshire. I like to hike and do all this stuff outdoors. But keep in mind, if you mandate 4-acre, 3-acre lots, then you're going to inevitably lead to sprawl, and that land is wasted. Instead, if you're able to build more densely and preserve land, I was talking to a developer not long ago. I don't remember all the details, but it was basically 100 acres. And he said he had a plan to try to preserve 25 acres and put, whatever the number of units is. By the time the town got done with him, he couldn't preserve any land. He had about half the number of units that he had originally planned because they were requiring such large lot sizes. So I think in many ways, if you want to preserve New Hampshire, and the outdoors and the rural characteristics, then you should be supporting the bills like Senate Bill 84 that we just talked about to allow for those smaller. It's, you know, we always get frustrated. We just think it's a win-win-win for everybody, but there is an enormous amount of resistance to it.
Yeah, and this idea of high density and preserving land is something that's been done in many parts of the country.
And it's been done in many parts of New Hampshire as well and been successful. I think it's fair to say that if probably a majority of single family homes today would be illegal under current zoning requirements. I mean, I know my home would be. I'm well under the requirements in my town of Concord, but it was built 100 years ago, so it was okay.
I just want to drive the point of costs a little bit. I grew up for 8 years in a third floor apartment on the west side of Manchester, and I did the numbers, and that apartment right now would be 50% more expensive than it was when my mom was raising us there. And I'm talking about actual, buying power. So that's the struggle we have right now. Something we talked about, Matt, you wanted to talk a little bit more about ADUs.
Oh, yeah, sure. I think just to kind of give some folks, if they're thinking about it out there, to kind of help support the idea of financing ADUs, I figured I'd give kind of you the flavor of what we're doing here at the bank as far as financing goes. Right now our current product is a second mortgage product. So again, so you don't have to touch that low first mortgage interest rate mortgage that you may have. Traditionally, second mortgages, home equity loans, they're 15, 20-year mortgages for affordability, monthly payment purposes. We do allow to go up to 30 years on our product, even loan to value. And ours is going to sound really silly, and I can promise you I'm not going crazy, but there is a purpose for it. But some places will allow you to go just 80% on a cash out refinance and stuff like that, or even construction loan. Ours can go up to 89.9%. And I would say maybe another, key feature is that for folks that are looking to rent out their ADU, but are worried about qualifying for the loan itself, we take a look at HUD fair market rents, and we'll use 75% of HUD fair market rents as qualifying income to help you qualify for the loan. So I would say those are some of the key features of our product that we have. Again, I think it's just, with the need for housing and stuff, I think there's a need for affordable and accessible products. So trying to meet that demand there.
Thanks, Matt. Any closing thoughts, Julie, that we haven't talked about?
No, I don't think so. I know there's a lot of questions in the chat just about different grant programs that would be available to help fund ADUs, and hearing about them in other states. And many of those are state funded, and I think they have been successful. I know we have had conversations with representatives from California who had a pretty robust ADU grant program that was state funded, and it got a lot of ADUs built. Unfortunately, New Hampshire doesn't have any program like that, but it's certainly, I think, a great idea, and something that could help with the inventory crisis.
Let's see. Well, if we can take one question here. Do you know if homeowners ADUs are renting their space to Airbnb daily rentals instead of no longer term or mother-in-law occupancy?
Yeah, that was one of our big topics of conversation. It's hard to police that. I know for us, what the purpose of the product is for long-term housing. So folks that are looking to provide long-term housing, whether it's for family or for long-term rentals. So we actually won't lend to the idea of doing an Airbnb because, especially in the markets that we serve, there's a lot of Airbnb short-term rentals, and I think it kind of defeats the purpose. At the same time, if we do one, we can't necessarily police what's going on out there because people could most certainly convert it. So, but that's not the true intention of the product or the idea of it.
I'll just add one thing to that. During the debate this past session on House Bill 577, accessory dwelling units, AARP actually came in, and this topic came up. And what their position was that many folks, especially older folks, might need for a period of time to do short-term rentals. or to rent to somebody for 4 months, 5 months, or whatever else it might be. And that helps provide them with the revenue they need in order to stay in their own home. So there was a discussion about limiting the ability to do short-term rentals, but the legislature, I think, wisely decided, no, we're not going to get involved in that.
Great. Well, we are out of time. Thank you, Julie, Bob, and Matt. We appreciate your comments. Thank you, everybody, for attending today's webinar. Again, this webinar will be recorded and it has been recorded and will be available for view. So watch for that. And thank you so much.
Thank you.
Thank you and take care.
Thank you.